Hi Chakri, a very good afternoon. Great to have you. Firstly, help us with your take on the autos then, because the EV space specifically in the passenger vehicle space is becoming very interesting. We have the leader Tata Motors. Now M&M is planning to go big there, and in the couple of months we'll also see Maruti Suzuki coming out with their EV in the next Auto Expo, that they will be finally launching that for India. But Chakri, what's your pecking order in the passenger vehicle auto space, since a couple of these stocks have corrected? So do you believe that are they value buys at these price point?
Yeah, good afternoon. Thanks for having me. Yes, in terms of there is a lot of action happening in the EV space. Tata Motors has had the early lead. They have a global R&D center and therefore have access to the best of the technologies worldwide. Then Maruti is the market leader in India, and they also have access to global R&D, and so does Hyundai. Hyundai is also coming out with an EV model very soon. And now M&M happens to be the now local boy who's now trying to get into this space. So there is going to be a lot of competition. The margins will clearly be likely to be lower than what they are in the traditional engines. And so now it's a question whether they will. The good thing is they have a product. Now, what needs to be watched is whether they can match up the competition.
So if you're coming in on the auto space, Naresh, I want to bring your take also over here. What's your view when it comes to the likes of M&M or Hyundai on the charts? Because M&M last 1 year itself, the stock has almost doubled itself. What's the chart looking like going ahead? Will you continue to remain bullish on this stock? And also give us a technical take on what you are seeing for Hyundai Motors as well.
Looking at M&M first, if you look at M&M, the stock has been the leader in the whole pack. And for now, it has been making a consolidation. 2700 is where there have been three bottoms. 3150 to 3200 has been where there are two tops. So this would be the range. Once we break about 3150, we get into a fresh uptrend. So for now, it's a consolidation with a longer term uptrend to be up. Hyundai, there is not much technical data to actually call out, given that it's a very new listing. So no views there.
All right, but now shifting gears to some of these companies, specifically from the power space, because today that counter or that particular sector is doing pretty well. So first up, if you can share your take on REC as well as PFC. Kunal, if I can have your take on both of these names, because of late in the past couple of weeks, definitely on the back of the news flow, these companies did got some of the bashing there, but they are seen to be recovering from their lower point. Do you believe that any of the stock is quite attractive at this price point?
So I would probably be on a wait and watch mode for REC and PFC both, because over the last one and a half odd month, first leg of the selling for REC, for example, was from 650 to 540, and the second leg was much more choppy one, because the stock from 540 towards 480 mark, even though it corrected just about some 10% to 12%, but the V-shaped rallies and the recoveries for the stock and the sharp corrections were pretty much on the extreme side, which means that the stock has still not found its trend or momentum back again. In these kind of circumstances, we typically wait out for a breakout or a confirmation of a breakout. The first level of a breakout for REC, for example, would be closer to the 540 mark, which was the previous resting point or the support point of the previous price correction for REC. So I believe that one needs to wait out for a breakout of 540 levels. Same with the case with Power Finance. I think that level is around 504, 505 mark on the spot level. So maybe another 2-3 percentage points higher from current levels, and that's where I would probably get a lot more confidence that maybe these stocks have gone back into a completion of the previous corrective phase and then looking to restart a major uptrend. Otherwise, the move would be choppy. If you tend to buy these stocks at current levels, you might probably look out for maybe a 15-20 points on the upside, but the risk reward would be, I think, closer to 1:1 or less than that.
Okay, so that's the view coming in from Kunal on PFC and REC. Waiting a little bit more to see some confidence on both of those stocks. But Chakri, coming back to you, I want to get your the sense that you're making of the IT pack. If you take a look at this index on the month-to-date basis, it's the top sectoral gainer 9% higher for this month that's gone by. Give us a sense of what you're seeing, because if I take a look at some of the names, you have mid-cap names like Coforge and Persistent that are at all-time high. On the flip side, your large-cap Wipro is at its 52-week high as well. Tell us, what's your outlook going in on this sector, given everything that's been happening in the US with the elections and with Trump's new policies, and also the fact that this sector has been doing quite well recently. So how would you play this sector, large cap or mid cap IT picks? What's your takeaway?
Cap IT will do well because of multiple good reasons. One is Trump coming back, lower corporate tax rate in the US means greater IT discretionary spend, good for Indian IT companies. Second is economic cycle in the US was turning positive, lower interest rates help IT companies a lot, so that is good. Third is, in terms of all kinds of companies, both financial services, which are big IT spend companies, and manufacturing companies, are beginning to have big plans for cloud spending. Now, so which means your large cap, Infosys, TCS, will do well on one hand. Second, the ERD companies, companies like KPIT, Persistent. Now, these companies, I think, have actually not participated in the rally yet, and I think it's worth looking at KPIT.
That's a take on the IT space, but today the whole EV space is seen to be buzzing, and one such stock related to that is Exide Industries, definitely an auto ancillary company. But Naresh, good price action happening today, because just taking support near to that 400 odd levels, the stock is once again resumed its uptrend. But how much do you trust today's move, Naresh, and what's your take on Exide Industries? 444 on the spot levels today.
So today's move is a strong one, given that it's taken out the last few days' highs. Volumes are also decent, and it has seen a decent enough correction. If you look at, say, a top of 580, 600, all the way down to 400, so good 30% correction. A bounce back towards 480 is what I would expect in the near term. Would be a buy at current levels and keep a stop loss below 435.
Next side is what is Naresh's view. Chakri, would you like to chip in with what the stock is looking like on the fundamental front?
Exide and Amar Raja both have corrected quite a lot. Both are very important. They're both the market leaders in the battery space. So both have plans in the lithium ion and in the new age batteries, but there hasn't been much actual traction. So I think if you're long enough waiter investor, then these two companies are worth looking at, because very important new battery technology as things go EV.
All right, that's on the battery companies. But if we talk about some of the biggies in the markets, and specifically look at the move in HDFC Bank, that is now trying to lend some support to the Nifty Bank as well, holding on to gains of 1.4% right now. So Kunal, if you can help us, that where do you see the stock headed? Because this week has been pretty great for HDFC Bank. Yes, we all know the MSCI rebalancing trigger. The stock is at its 52-week high levels, but now seem to be crossing that 1800 mark. Which are the next levels that you are eyeing at?
Yeah, so this seems to be like a very strong and a potential, powerful breakout for HDFC Bank, because there were three, previous attempts towards the stock trying to cross over that 1800 level. So 1794.97 approximately was the high for HDFC Bank for the last, many quarters. So it seems like the stock has finally managed to surpass this level. If it sustains for, say, another, 1 week above the 1790 levels, then I would believe that the move could start to get a lot more stronger for HDFC Bank going forward. There are a lot of things which have happened, so the stock has found its mojo back in terms of the leadership quality. The stock seems to have come back into a good price volume breakout mode. The correlation for the stock with respect to the banking index has also improved in the last say 3-4 weeks of the price appreciation for HDFC Bank. So I think on the back of this, my expectation is that the stock should do pretty well. 1950 to 2000 could be a potential broader target for the stock, because we've seen historically that whenever the stock gives a breakout of such kind of a major time frame consolidation, then at least 8 to 10% rally is what we expect into the stock in the near term.
1950 to 2000, Kunal, quite the uptick is what you're spotting on HDFC Bank. So that sounds Optimistic for the stock coming in. Chakri, I want to shift your attention to the entire real estate space because this pack has been doing well. You had a note coming in from Jefferies yesterday where they like Lodha, Godrej and DLF. But if you take a look at what the index has done on a weekly basis or on a monthly basis, not much is happening. And today Prestige Estates is also under some pressure. Quarter 2 has largely been mixed for all of these real estate companies. Tell us what's your view going ahead and what names are you liking from the entire real estate space. Also, talking about this entire conjecture that's there in the market about the new real estate policies coming into place now that the Mahayuti government is going to be formed in Maharashtra. Tell us what sense are you making of the real estate space and how this new government election can also help this space going ahead.
Maharashtra is a very important state for the India's GDP, as well as, the construction plays a very big chunk of employment in Maharashtra. And that activity has slowed down in the run-up and during the elections for the last few months. And now that there is a clear BJP mandate, so that will help clearly revive the prospects for the construction. And so which means Macrotech is one of all the Bombay-based players are prime beneficiaries. And second, there are some very big infrastructure projects. So there, companies like Prestige will also participate in that happening. And then, we still, I think, interest rate cycle is still, we're at the peak of the cycle. So as that turns in the next month or two, I think that'll be an additional catalyst. So definitely buy Macrotech.
All right, that's the take on the real estate pack, and it's a definite buy coming in on Macrotech developers. But it's just a few minutes left for the markets to shut shop. So let's try taking the BTST ideas by our experts. And Naresh, if I can start with you, what are your top bets for the BTST trades?
Tech Mahindra, the stock is on verge of a new 52-week high. Stop loss at 1740, target price of 1790. Second is the Bharat Syngene, close to making a breakout move, a revised stop loss at 910, target price of 945.
Coming to you now for your BTST trades, tell us what are you liking?
So I'll go with the one Syngene. That's a chart which is looking attractive. Targets of 960, stop loss to be kept at 900. And Interglobe Aviation is the other stock which is looking fairly attractive. The stock confirming a breakout and coming closer to with the filling of a major gap, which is just around that 4,280-300 level. So would suggest about Interglobe Aviation, targets to be kept at 4,400, stop loss at 4,200.
All right, that's the take, and those are the calls coming in from both of our experts. So Syngene is coming out as a consensus buy by both of our experts right now. So let's watch out for that. But for today, if we talk about the movement in the pharma space, a couple of these movers in the recent past from Laurus Lab, Granules India, they are seen to be drifting lower. So let's see how pharma sector all in all performs. But today has been a good day actually for the cement counters. And Chakri, if I can help with your take on the cement pack, because just a recent report coming in from Elara Capital, they are highlighting that the prices struggled to gain the momentum. The all India average price hovers near the September levels, and the price hike attempt of rupees 5 to 25 rupees per kg, that is not building on to the rest of the regions. They are just sustaining at these levels. But the stock price movement is definitely not sustaining, Chakri. It's been a good day for the cement companies. Any of your top bets from this sector, and how do you see the overall landscape shaping up?
Clearly the ones in the cement sector, ACC, Ambuja, after the recent fall due to the Adani-related reasons, and they're also the market leaders. So, they are pushing through the volumes which is there in the markets. They are acquiring companies, and therefore, ACC, Ambuja would be the first ones to buy, and second would be Ultratech. This has become an industry because of ACC and Ambuja, who have led the acquisition spree. And it's going to become a volume-driven industry and not a price-driven industry. So market share is becoming more important, and therefore these players, our market leaders, will benefit.
Okay, Chakri, also want to get your view on this entire FII activity that we've been seeing over the last couple of days, because if you see, they've turned net buyers after being net sellers for 38 consecutive sessions. It's looking positive. It's starting to look positive. It's just been 2 continuous days of buys coming in from FIIs. Do you believe that now it's a good time for from an FII perspective to start investing again into the Indian markets? And also on that note, do you believe that the consolidation that we've been seeing so far has come to an end, and now we only have good days ahead? What's your take on that?
Post the earnings downgrade for the index, the market, and also the market fell along with that. And now the market is trading probably at about 17, 18 times, which is a very good valuation number. It's not expensive at all. And, kind of reflects that, earnings have slowed down. So at this point in the cycle, therefore, growth is very important for FIIs, because on one hand, you have currency depreciation, which takes away returns, and therefore that has to be compensated by higher earnings growth, which was missing. Now, with the stock, with the earnings kind of hopefully bottoming out, and if an RBI cuts rates, that will be a catalyst for FIS to start coming back. So, and clearly, in terms of the market, it's clearly looking attractive after the fall. Many of the stocks in PSG stocks, some of the, of course, the Adani stocks, many of the stocks have fallen quite a lot, and therefore worth considering buying at current levels.
All right, but just 10 or 12 minutes left for the markets to shut shop, and what we are seeing is that the markets are heading for a decent close in today's trading session, though the India Wix has now down to about 4% in trade right now, but it's Nifty 50 that is holding on to well above those levels of 24,200, taking support at that, and 24,275 is the spot level, while for Nifty Bank, it's more than 100 points of gain, so nothing much to complain, but yes, indeed, the Adani group of counters have been the star performers. But Chakri, today if we look at some of the beaten down names, especially from the likes of Vodafone Idea, we all are aware about the troubles that are going on, but it's the second straight day that the stock is moving on, as well as today is now gain of almost 11.5%. So Chakri, any take here on Vodafone Idea, because it's just the first positive news that has come in for this particular stock, but what is the overall outlook on the telecom space, if you'd like to share?
The government removing the funding requirement, collateral requirement, kind of helped. I mean, that's what helped Vodafone and as well as Bharti. But this doesn't really solve the problem. Between them, they have 1 lakh crores. Vodafone, of course, has like 70,000 odd crores, which still has to repay. They have to find the money to refinance it, and ARPUs are not going up at any other kind of speed to be able to bring down the debt. So, it's best that, it's great that if you had got the stock on a trading, but I would still stay away from an investment perspective.
Okay, so that's the take coming in Vodafone Idea. Naresh, any technical take coming in on this stock?
Really, we've broken down the major price points over the last 3 months. Going forward, 8.5 is the first price point, which is a resistance, and then 10, which is where the issue took place to the government. So till the time we don't go back about 10 levels, the stock continues to be in a downtrend. And 6.5 has been the low for the last 2 years. So that is a price point. So I would expect it to be range bound for the next many months.
Okay, so range-bound moves are expected on Vodafone Idea from Naresh. But let's keep it going about a lot more sectors. And Chakri, I want to get your sense on the entire FMCG space as well. Now, Q2 has been quite mixed when you take a look at the volume growth. But we are hearing that there are some companies that have undertaken price hikes to combat that. Do you think that this corrective measure of taking a price hike is going to aid the market share story going ahead? What's your outlook on all of these FMCG companies then?
India's inflation, which has been about 6%, the price hikes have been around less than that. So, they're probably trying to cover up at least for the costs, the inflation costs. So that shows that there is clearly no pricing power yet. Given that, and there is no product innovation, and overall demand is kind of cyclically sluggish. It will cyclically turn up. There's nothing in particular which would want us to make and go and buy FMCG names.
All right, but though the index movement is very subdued in today's trading session, but key to mark is that a lot of stock specific action, and some of these beaten down names are making a very strong comeback. Look at the move in some of these defense names. The railway stocks are doing pretty well, and even one of the recently listed counters, that is Swiggy, that is now up around 9% in trade today. So a very stock specific action today. But Naresh, specifically, let's put the spotlight on the defense names. Yes, indeed, the recent JP Morgan note did fuel the rally and did get some respite to all these beaten down names. But do you believe that the recovery could be substantial from these levels, and any stock that is still looking attractive to you, you would like to point out?
So there has been a fall of 40-50% in a lot of these names. So something like Bharat Dynamics has fallen from 1800 to 950. Going back to 1200 would be normal. So we would expect a bounce back from the lows, recover some bit of it. But overall, the longer term trend remains weak. The only name which really has a strong chart and still looks interesting is Bharat Electronics. That's the one which had not seen a mad parabolic move, and now has consolidated, given a fresh breakout. So in dips, it would be Bharat Electronics as the preference, and then maybe one could look at Hindustan Aeronautics.
Okay, so BEL followed by HL is the pecking order for Naresh. Kunal, would you chip in here about your take about the defense companies, especially what you're making of shipbuilding stocks like of Garden Reach, Cochin Shipyard? They have been doing pretty well after this recent consolidation that they've seen. What's the outlook on the charts?
It's difficult to handpick just one or two names, but I think it's the overall basket which is looking very attractive. So I think the best way to try and chip into this space is to try and buy the stronger names and the more formidable ones. So yes, of course, BEL, HL are the stronger names, but from the shipbuilder names, GRSC, Cochin Shipyard, Mazagon Dock, these stocks have already corrected. So when you look at this over the last 6 months or so, there was broadly a 47 to 50% plus kind of a correction for many of the stocks, in this space. Even after this today's rally, when we look at this from the the performance of these stocks from their recent highs, they are still off by a margin of 35 to 40%, and that's a steep kind of a margin on the downside for these names. So I think one should not be looking out for that. These stocks have bounced off 5%, 10% from their previous swing lows, but look at it in a manner in which that these stocks are still yet to cover and come back and cover up the huge underperformance and the correction over the last 6 months or so. So I believe that the entire space looks attractive. Difficult to just about pick or handpick one or two names, because what happens is in the best of the momentum times for the defense and the shipbuilder names, all of these stocks, they tend to perform in a very similar kind of a price trajectory. So the entire space looks attractive.
Okay, so space is looking attractive from the defense front. Thanks, Kunal, for that. But on that note, Chakri, Kunal, Naresh, thank you so much for joining us.
If you like this video, then like, share and subscribe to ET Now.